Greetings, everybody. This is Jeff Scott. It is Sunday, February 2nd. It's about 11 p.m. Hope you all enjoyed the most lopsided Super Bowl that I've ever seen, probably ever will see. What a letdown for those of you that live in Denver. Who would have thought that Russell Wilson and the Seahawks would so dominate the game? But it was interesting, at least for the first 2 minutes. But let's talk about more important things, which is the status of the market and what we think is going on this week. Trying a different format. I'm using Camtasia. I scaled back my high-end monitor so that hopefully it'll be more usable, I guess is a better word to use, at a 1920 by 1080 instead of the 4K or 3K resolutions that I tried them. But I didn't seem to do very well with those when I tried them on my own. Jeff Scott here, as usual, Jeffrey at HgsiDoc.com, and let's go ahead and get started. As usual, here's a disclaimer. This is for educational purposes only. I'm a doctor, not a broker. Most physicians lose money with their trading, and I am truly independent. I have at one point paid for all the tools that I use, and I think that gives me the opportunity to be somewhat without bias, although no one's without bias, and I'm obviously a huge fan of Hgsi, HRader, and other programs. My style, a couple of people made comments to me that they thought I was a day trader. I'm not a day trader. I'm a swing trader. And frankly, at one point I was looking at working with a third party besides Hgsi and building an educational program around a swing trader that wants to let their positions ride when possible. And if I look at my big money that I made over the last year or two, whether I look at Celgene, Gilead, Valiant, Jazz, United Rentals, Delta Airlines, we could include Activists and many others, what they have in common is I've let them run. I buy as a swing, and then I manage my trade. And a couple people have asked me about my stops. At purchase, I put on a trail. Usually not a specific percent, but tied to why I bought it. If I'm buying it because it's a MOBO breakout and breaking above the high of yesterday, if it trades or closes below where it opened today, or perhaps where it closed yesterday, and it opens the following day below that point, I'm out. That's a hard. There's no negotiation on that. Once I'm up 4 to 6%, I'm going to move my stop to a break even. And when I start to run, I place a chandelier stop, and I don't lower my stops, but I built the chandelier stop automated so it actually tightens the stop as we go up further. Now, at some point, I'll look at a stock and say, well, I've had a 25% run in 2 weeks, and I'll take my stop off, and I will manage the stop nightly by looking at where the stock is. And I move those, my big winners clearly move to a different stop program. And as I said, I removed my automated stop. Time to start talking more about the Hgsi meeting in March. These are great meetings. I'll be speaking there, as will George Lee. But this is really the Ian Woodward and Ron Brown show, and if you haven't been to it, you're missing out on a great meeting. In addition, my meeting is essentially sold out, but I may have a few seats open if people change their mind. There's a couple of people I'm still on the fence with. So there's 2 or 3 potential positions. If you're interested, please email me at Jeffrey at HgsiDoc.com, and I'll give you more information. I talked about this, I think, last week, and I just wanted to call out a couple of the newer folks here. Ian once said to me, he's not a guru, he teaches you to be your own guru, and he's right. And I've tried to take that to heart, and what you see here, whether it's Ian and Ron, O'Neill, Morales, Katcher, Pascal Willang for effective volume, Banthar for position size money management, Alexander Elder. These are the influences that have driven my style and how I trade. And what I wanted to point out, I think I pointed out last week, Anna Culling, her book's a couple dollars on Amazon, a great way of looking at effective, or excuse me, at volume price analysis, or VSA, as described by other folks. Fairly well written and easy to read. And then I got to tell you, I really like this book by Mark Minervini, Trade Like a Stock Market Wizard. I don't think he came out of O'Neill's shop, but he sure writes and trades like he did. Very much heavily influenced by canceling. Frankly, it sounds more like he went to an Ian meeting, but fairly easy to read. And one thing I've noticed is that all of these have a similar pattern, which is especially O'Neill, Morales Catcher, Woodward and Brown, Minervini, which is find stocks that are in uptrends, let them base, and then buy them when they come out of that base. And that could be a cup and handle, it could be Minervini's VLC, it could be MOBO breakouts from a squeeze. There are a number of things that I do, and all of them are about the same, which are looking at uptrending stocks, so above the 200-day moving average, often pulling back to the 50-day moving average, going sideways for a while, and then ultimately breaking out. I have a lot of programs on my desktop. I only need several to trade, and they're listed here. And as I mentioned last time, VectorVest has a new options program that's with Tom Joseph. I purchased it, but I still haven't received it. They said it'd be out by the end of January, so obviously not yet. Last week I said, are we on this shoulder and are we going to drop? Are we going to go higher? I think we're still there. I think that last week when I did my stock review, I was pretty pessimistic that for every good stock, I saw two that looked like short candidates. I'm not as pessimistic this week, and I'll show you some evidence of why I think that this market may give us a little bit of a rebound. But clearly, there is a period of indecision, which is why I entitled this Market Indecision. My thoughts about the market, clearly it has been overbought from a long-term perspective with several 4 to 5% corrections. We're at about 4% right now. But short-term, it's oversold. Take a look at the buckets, as I'll show you. Yes, the Fed continues to read QE, which is a negative to the market. This is putting a pressure on emerging economies, causing a rising dollar. But it's also stabilizing interest rates. And interest rates, when I looked at them this week, actually looked like they were lower than they were prior to the reducing of the easing. So the Fed is clearly threading the needle if they can keep the market from falling off a cliff and keep interest rates below 3% as they pull out their easing. And then the LLURs and canaries, which are supposed to warn us of market collapse, they're singing again, and I'll show you that. From an industry group perspective, what would you expect if interest rates stabilize? You'd expect to see home builders, REITs, MLPs, and utilities, all which are dependent upon interest rates to outperform, and they clearly were this week on my review. Before I go forward, I want to call something out. You're going to see a new view for my charts today. I call it the toilet bowl, and that's because if you filled up the kitchen sink too much, you end up in the toilet. And I've added certain things to my chart, which will be available to all of you shortly. And I'm very excited, and thank George for adding the squeeze and MOBO breakouts and breakdowns. So I now can scan for them, I can chart them, and I can include them in my warehouse views and combo ranking. So I'm very excited about those, and I'll show you tonight how I use them. Talking about the canaries. The canaries, which as you can see here are the big players over the last year with a huge move in the last 6 months, and they're essentially about to break out to all-time highs. You wouldn't expect that necessarily in a market that has been falling. Now, you'll notice on my view that I've added the squeeze here in yellow, so you can see when it's squeezing, and it was squeezing. And then the last thing here, green and red, these represent MOBO breakouts and breakdowns. And you can see on Thursday, you had a MOBO breakout in the canaries, getting above the confluence of the 17 and 14-day moving average. From a squeeze, with a DI crossover, everything looks green. If that was a stock, it would be one of the highest ones on my buy list. So it's a little bit harder for me to believe that market calamity is upon us with the canaries singing. How about the LLURs? And obviously we did have a pretty dramatic pullback, but then we talked about would they hold at the 50? They did. And not only did they hold on Wednesday, but they had a big bounce on Thursday and closed up a little bit on Friday on the canaries. Excuse me, on LLUR. So if these are supposed to be early warning signals, they're not warning us of an imminent market decline. Now on to the charts and the rest of my analysis. I often like to, let's say cheat. It's the opposite of cheating. I like to go look at what the futures are doing real quick. So let's just jump into here, pre-market data, and we could see that futures are up a bit. This would be a nice open if it stays this way, but it's got 9 hours, 10 hours, what am I talking about? Got about 10 hours before the market opens, but the S&P's up 3 points, the Dow up 22, NASDAQ up 4. Now, I used to remember there was sort of this Super Bowl, what would you call it? Super Bowl curse, and that if one of the original NFC teams won the Super Bowl, it was good for the market. So we got a big problem because both teams this year, well, I guess Indianapolis was Baltimore, so even though both Indianapolis is an AFC team and Seattle was an original AFC team, we did have an NFC team, original NFC team, and Indianapolis need Baltimore Colts, and they lost. So that would be a negative omen for the market. What I'm looking at right here is my real quick review. This is a group performance analysis. It's really a tale of different worlds. I see a lot of black, but still probably more red. I see certain things that usually do well. My Ian point score was down 1.7%. Stocks that a week ago had a Kahuna Force, MOBO Breakout, and a Pocket Pivot were down nearly 2%. Bible gap ups were down 3%. Short-term demand and growth stocks were down 7.89%. Something's wrong with this. I might have had, let me make sure I didn't have a filter, because that would make a big difference. Nope, only filter should have is group index equals no. I don't understand those numbers. They seem small, but let's look at some other things here. Best stocks under $15 were down 0.71%. And then we can find the S&P 500 was down 0.43. My stocks and my buy list were a little down less than that, but still kind of a nothing week. Now, what was working was HGS 100 was up 0.73, and the IBD 50 was up 2.62, and my GIF All-Stars were up 2.58. Breakout, squeeze filter, Best of Woodward and Brown was up 0.9. So I kind of scratched my head as to why the difference in performance. And I think it really comes down to the presence in some of these lists of a couple of just major winners for the week. Under Armour up 24.6, excuse me, that's not right. Well, it was up about 23%. I mean, there's a formatting issue here. Qihu was up 29%. Alexion was up 19%. Facebook was up 18%. 15% for Wynn, 12% for Aspen. So I think for you to have made money this week, you needed to be in these stocks. You don't even see Chipotle, which had just a great week. So my usual players, Celgene had a tough week. Okay, we just shipped everything down. Celgene was down. Let me fix that. Let's do that here. Delete on that. Shift rows up one. All right. So here we fixed that. But we can see Celgene was down 5.7. Priceline was down 3 points. The big losers for the week on the big name stocks, I think, were, well, big one was Amazon.com. So, as I said, sort of a split, but with high growth stocks, especially as represented by IBD 50, HGS 100, and the GAF All-Stars really outperforming. There was no Hindenburg this week. Got close, but you got to have over 2 point, go back up here, new highs, new lows greater than 2.2%, and then you have to have the new highs being less than the number 2 times the new lows. And you were not above 2% on the new highs, or else you would have triggered it on a couple of days. So clearly weak market, and even though Thursday was a great day, you still have 1.38% new lows. I mentioned that we're still oversold on the short term. Here's my bucketology, and you can see the majority of the stocks are in the lower 20% or below the lower Bollinger Band, with 73% being below the midline. Now, this was on Friday. If you back out a couple of days, I think I can look at Monday. This is really oversold. Not the 80, but 32%, 33% of the stocks trading below the Bollinger Band. Would have expected to see a bigger bounce, perhaps, but we did have a huge bounce to bring the week back to flat. And if I think about my performance in the market, Monday and Tuesday were painful. Wednesday was a great day. Thursday wasn't bad. Thursday was a great day, and Friday was down a little bit. So we did work off some of this oversold, but we're far from overbought on the short-term perspective. You look at the markets, and green is good and red is bad. You could see we had some kahunas coming into the major markets during the week, but they're still down at the lower part of the Bollinger Bands, which is why there's red. You've got to be 0.2 or below to be red, and the percent B times bandwidth is still predominantly red, so that's a bearish-looking picture right there. This time I usually like to pull over my trade station. Let's see if I can get that to work. I've got different resolutions on my side monitors, but on trade station I like to quickly look at the major indices and see if we've turned around at all. Remember last time I talked about how we were knifing through the lower end. Let me put some more stocks on this. Last time I talked about how we're breaking through this auto envelope on the bottom, and that we don't do it very often. This is going back to October, and that we should probably reverse from here. And we've turned blue, so that gives you sort of a user's choice, whether you want to buy, sell, or hold. When you look at the MACD, you can see the MACD is clearly heading lower on this low here, so no divergence there. Weekly and monthly are also blue. So the NASDAQ off of the sell signal, certainly not in all clear. Take a look at the Dow Jones Industrials. Still looks pretty awful. In fact, painted a red and at the lower end of the envelope, red on the weekly, blue on the monthly. So the Dow at a sell signal, and this lower low was accompanied by a much lower low on the MACD. So a lot of selling pressure persists on the Dow. Look at the ES minis. It went to blue, representing S&P 500. So not as strong perhaps as the NASDAQ, but not as weak as the Dow. Still red though on the weeklies and blue on the monthlies. So weakness persists in the market, albeit perhaps less weak than it was the last time we looked at it. All right, now let's go into the program. First thing I like to do is go into my warehouse view, and then we will fill the screen. We'll go down to major Wood and Brown groups. We'll look at major market plus. We'll go to top-down view, and let's see what comes to the top. So if you're a trader of stocks and you were long for the week, it wasn't fun when you see treasuries lead, followed by utilities, the dollar volatility. If you're a silver investor, my condolences, you had a tough week. Gold not as tough, but still weak. And if you will trade the market, especially the Dow, it was a tough week. So let's take a look at some of these. Now you'll notice, although it's harder to see here because it's small, I didn't put in this one. I'll show you how I can put, well, I could do that right here. If I went into edit current view, you'll see that I now have MOBO breakout, MOBO breakdown, and Keltner squeezes. So you can now, or will be able to shortly, to actually be able to update your views so that you can actually include at the back end your MOBO breakdowns, breakouts, and Keltner squeeze, and you can scan for them and search for them. So I think that's going to be a very nice addition, and you'll see how I use it in the charts in a couple of minutes. So let's take a look then at some of the performance in these major indices and get a sense of what is going on in the stock market. All right, so we're going to start by looking at the S&P 500. So you'll notice on my charts, I have kahunas on the bottom, Eurekas here. The Eurekas are calculated on the NYSE only. I have 5 moving averages. I got a purple, which is an 8-day exponential. I also have a purple dash, which is a 65-day exponential. I have a 17 in green, a 50 in blue, and a 200 in red, simple moving average. I have Bollinger Bands. I have I guess not in this view. I think let's take it off the group index. I used to have a group index here, but I don't see it in here. Up on top, I have Hindenburg Omens, which we don't have any right now. I have the Bongos, which is a momentum indicator, accumulation and distribution. I have the force indexes, which won't show up unless you have volume. I have the high jump bar, which is obviously quite low with the red candle highs and green candle lows. I've got DI crossovers, and then Bible gap ups, squeeze, and MOBO. So when I look at the S&P 500, I see a MOBO breakdown on Friday after a pretty good-looking day on Thursday with the kahuna. Now, one thing that I see is that we're sort of the last 4 trading days, we are really in quite a narrow range. So, perhaps we're going to set up a base here and then see if we break above that or below that. So that's something that I'm going to personally be watching for. So weak, but going sideways, above the lower Bollinger Band, but below the 8-day exponential, so the sellers are in control. If I look at the Dow Jones Industrial, this one has volume, so you can see the force. All my momentum indicators here are red, which is bad. I have breaking to new recent lows on Friday on the Dow, and I could see, where's my next level of support is probably the 200-day moving average. If it broke through that, are we at risk of testing down here? That low, I sure hope not, if I'm still long. Big volume. It did close up off the bottom on Friday, but that's the only thing I can say positive about this. If I look at the NASDAQ, again, a lot stronger in that it had pocket pivot down volume signature. Whatever that means, I don't think I've ever validated except through my discussions with George Lee. The pocket pivot down, I know he makes money using it, but it did close right above the 50-day moving average, also below the 8, after a very positive day on Thursday, mostly red on the momentum indicators. Russell 2000, a little bit weaker than the NASDAQ, closing below the 50-day moving average, above the lower Bollinger Band. It too had a big day on Friday, failed at the 50, and so you're going to have some resistance here. with the 50 and the 8-day coming together. So I won't believe the Russell and probably the market until I see these things get above the 50-day moving average. So yes, we're in a long-term uptrend. We've pulled back, but I really see a market that, I mean, indecision is correct. This market could go either way. What was working? The dollar. Now this can be bad for stocks. Although it could be good for interest rates, which paradoxically would mean it was good for stocks. And you can see the dollar gapped up twice Thursday and Friday. It struggled to get and stay above the 200-day. It's about not far away from that point right now, and we'll be watching that. But you can see you've got, I don't know, I wouldn't call this is that a wide cup and a handle and a breakout here? I don't think so, but certainly looks more bullish. Everything else we've seen, everything is green up on the momentum. You did have a MOBO breakout from a squeeze on Thursday rather. Volatility, it's creeped up. Now it's getting to a point where it usually gets smacked down. And as we've learned, the market suffers in periods of time when volatility goes from low to high. But if the volatility sells back down to 12, that's what might be an opportune time to make money in the market. So volatility right now bothersome as it creeps up. So I've been less than enthusiastic on gold. I was willing to start nibbling it when it broke above the 50. I was concerned it would also have to get above the 200-day to make me a believer. And, we're struggling to stay above the 50. So let's see what happens there, although some of the individual gold miners, GDX, looking at gold miners, a little bit higher up on the channel. It's above the 17, closed right above the 8. Might look a little bit better, but still gold, I think, has a ways to go. And I made my little comment about those of you that are silver players. Silver looks substantially even weaker than gold, if that's possible. And you can see silver is below the 50, where gold is above the 50. So rising dollar will be good for certain things, and we'll see that in the home builders, the REITs, the MLPs. Lowering interest rates will be good for them, and I think the rising dollar will help on the interest rates. All right. We could very quickly look at some of the market internals, so I need something with volume. Let's look at the S&P 1500 and the broad market indices, and let's go look at my eye charts. I will work with George hopefully before the update comes out so I can build in my filters, my views, and my charts that I actually use here. So here's the S&P 1500. You can see it's sort of in that little trading range, but below the 50, which is ominous. We can see that the AD line, the advancer, the DMI plus has crossed below the DMI minus. Our bongos and our forces are red, which is negative for the market. And the market was down on Friday, not much, but it was down on Friday with a lot of volume. Take a look at the next. Oops, I didn't want that. My bad. New highs, new lows. We're green, which means the Q of new highs versus lows is above the 13-day exponential moving average, which is nice to see. And we still have the lighter green, so new highs, new lows are greater than 0, but less than 65. So more new highs than new lows, rising of the line, still above the EMA. So we're okay there. Look at accumulation distribution. You could see at the end of the week, perhaps the A's have gone up, a little bit of the E's have gone down. You look at all three letters, you can see the E's coming off the bottom. The D's still extremely strong, and the E's fell off some. You can see where price is below the 22-day exponential moving average, which is bearish. Another way of accumulation distribution, D's and E's trump A's and B's, C's heading down. You look at 5-to-1 volume days. You can see that we had a very strong day. Advanced decliner 5-to-1 on Thursday, But on Wednesday and I believe on Friday of last week, we had 5-to-1 down days. In fact, on Friday a week ago, we had a 10-to-1 down day. And lastly, looking at stocks in relationship to their the number of stocks trading above their 20-day, 50, 30, 50, and 200-day moving average, and then with their respective moving averages of those lines. And the more extended you get, the more likely you get a pullback. We're pretty extended to the downside, and as you look back, this is pretty much a time where you start to expect to see the market to pull back or to come back. So by buckets and perhaps by this number of stocks trading below their moving averages suggests that we might be approaching a time when the market might rebound. Next thing I like to look at are industry groups, and I'll leave on the T for a second so you can see that we have 145 industry groups. The T1 view gives me all technical, so it's all price and volume, but it's looking out 2 or 3 weeks. It's not just what happened the last couple of days. I don't think it's fast enough for what I like to look at, but you can see over the last several weeks, home builders have popped back up 5.7 in the last 5 days. REITs, office REITs, residential REITs, retail REITs, paper products, utilities, diversified REITs, electric utilities, gas utilities. So a lot of, here's your storage and transportation, your MLPs. So a lot of these interest rate related entities have moved up. Let's see what's looking over the last couple of days. And you can see that on the 2-day force, only 34 of that 135 are up. And we have 47 groups down. So that is bearish because typically we see a lot more to the upside. Let's quickly go through some of the strongest ones. Internet retail, Facebook, and Netflix, I think both continue to look very strong. So now let me shut that down. Let me open this up. Let me go back to the toilet bowl. I'm going to like saying that. And so on my toilet bowl view, what do I look at? I look at very quickly. I see a lower left, upper right. I see a pullback to the 50, breakout on Thursday and Friday. I see on Thursday a viable gap, a DMI crossover rather, squeeze, MOBO breakup from the squeeze with a DMI crossover and a kahuna, very bullish. I like Facebook. I think Facebook is still something you want to be holding. Netflix looks like it's expensive, but when you look at its fundamentals, it's probably not expensive. If this market breaks out and goes up from here, same thing that Gil Morale said in his webinar, this would be or could be one of the leaders. It maintains a big uptrend, had great earnings, everything is green, and I like Netflix a lot. It's an expensive stock and will probably be dependent on what the market does, like everything else. Pharmaceuticals were the next group. AbbVie, I think, had some good earnings come out, and you can see some of these were major ups for the week. So AbbVie, what's kind of exciting about AbbVie is they have a drug that, two drugs to think about. One that competes with Gilead's drug for hepatitis C, and one that competes with Pharmacyclic's drug for CLL and pipeline. They also have Humira, which was Abbott's big drug for rheumatoid arthritis and a number of other inflammatory diseases. Now, the bad news about AbbVie is it's still below the 50-day moving average. It had a nice little failure despite the pocket pivot DMI crossover and failed at the 50. If this can break above the 50, this might be something to watch. It had huge volume on Friday, big gap up, but again, below the 50-day moving average. Activist has been one of my favorite holdings for some time. Lower left, upper right. Looks like it wants to run again. Everything is green. Had a MOBO breakout on Friday. No squeeze. A pocket pivot. Thursday rather than a pocket pivot on Friday. Great earnings per share growth. Don't know anything about this one. It had a viable gap up on Friday. It's expensive stock that doesn't make money. Now, hard for me to ignore. Everything is green. Viable gap up. MOBO breakout. You can see the big gap up here, closing in the midline. A kahuna on giant volume. Can't say anything about it not. I don't know it. You might want to look it up. Questcore I highlighted a few weeks back. when it was down here and when it was here, both great times to buy a stock, but always concerned about this because the shorts have a tendency to knock it down when it gets up and extended. Great earnings per share growth. Ignore this. I looked at it on MarketSmith, and what I saw was it's got great earnings per share that likely will persist for some period of time. In fact, let's just take a quick look at it. If this format with Camtasia works, I'll probably use this for my non-live sessions, as it's pretty easy to use and doesn't require any internet use, so I don't have to worry about turning off anything. So you can see Questcore, $6 in 2014, growing over 20 times, has a multiple of 14. If it does $6 and say $7 times 14, it's $98. It's trading less than 70. So clearly a stock that has an opportunity, but I always worry about this one because of the short sellers. Hgsi is now finally broken out. Now it had perhaps a shooting star and then a doji on Friday. This is a stock I find interesting, and again, people that know me know that I like earnings, and I really like earnings a lot. They're one of the most important things that I watch when I make a decision to buy something. And Hgsi, has some recent drug approval, and you could see it's projected to make 57 cents in 2013 and then $1.13 in 2014. If this really makes $1.13 and is growing nearly 100 times per year, even if that multiple falls down to 30, the stock's worth quite a bit more than it is where it trades here. Something to watch, but you wouldn't want to buy it until it breaks out above where it's at today. If it opens up down on Monday, I wouldn't be touching it. I'd be watching it. This is a really good list, so I would take a look at these pharmaceuticals. Except for Lilly, these are not Pfizer and Merck. These are some of the smaller companies in the index. All right. Now let's go back. Third group down would be home builders. They all look, well, I can't say they all look similar. No matter how I looked at these, several of them made my list. They certainly, I don't know what I did here, are running as a group, and they all are similar. Many of them have earnings per share growth. Peyton may not be the most robust. They had pulled back underneath their 200-day moving average. A couple weeks ago, several of them broke above this. Peyton nicely tested it and held. Then a series of pocket pivots, a couple of kahunas, a MOBO breakout from a squeeze on Thursday, although it traded down below where it opened, although still up for the day. Everything's green. As you look, this is one of the types of patterns that actually looks better than most. Here is Lennar, similar story, a little bit nicer pattern, breaking out to a recent new high here. Kahuna on Friday, everything is green. Here is DR Horton, their earnings are out, similar pattern. So I look at these stocks and they're starting to run again. And when they run, you can get some really nice runs. This is a weekly chart. I think they're getting ready to run again, and as long as interest rates stay below 3%, this might be a place to spend some money. I'm not going to go through all of them. Suffice it to say, a lot of them look good. System software index. So Microsoft, I find Microsoft to be boring and stodgy old company, but doesn't mean I can't own it. Let's take a look at its chart. It looks like the home builders broke above the 200 on a pocket pivot. Everything is green. DI crossover, had a MOBO breakup from a squeeze on Thursday with a hammer, a lot of volume on Friday. Might be something to watch. What's more exciting to me is Qihu. Really nice long base. Tested the 50 here, and now it had a big move up, straight up the last 5 days despite the market showing weakness. It's got great earnings per share growth. I like Qihu a lot. I've actually liked it for several weeks. I don't get FireEye. This is probably just evidence of group strength. But like Weehoo, it's got a powerful looking chart. It had a MOBO breakout on Friday, mostly green up here, although the Bongo daily red because of a pullback here. It looks like it wants to run as well. Doesn't make money, and that makes me a little more nervous, more of an IPO recent addition. Next list down, number 5, casinos and gaming remains strong. You know, I look at the earnings growth on Wynn, and I get a little bit nervous, but I guess, you know, I don't understand the multiples on these. So here's Wynn. It's got a multiple of 26. Its growth rate is half of that going into 15. It's got a flat growth in 2014. If I look at its range has been from 15 to 305, so I guess the multiple doesn't mean anything on this stock. This is a play on Macau, and whether you like Wynn or you like Las Vegas Sands, or this is Boyd Gaming, this one is below the 50 and the 200, so even though it looks like it's making a move here, it's not in an uptrend. Let's take a look. So here's Las Vegas Sands, pull back to the 50, maybe give you an opportunity to buy it here off the 50-day moving average. The other one that's got a big Macau presence is MPEL. I think Wynn is driving this group. The rest of them look like they pulled back to the 50. But as you can see, that group did show some strength. But again, I think a lot of that is Wynn. Internet software and services. We'll just look at Google, and then I'll see if anything else jumps out at me on this list. Google, which was a seasonal sell. I know my buddy George Lee bought some puts and made some money here. Pull back, not quite to the 50. And then by divesting itself of Google's Motorola handset division to Lenovo, big bump up on Friday with pocket pivot, a MOBO breakout from a squeeze, a Bible gap up, a DI crossover, everything's green at Kahuna. Every positive thing that can hit on Friday. Now, sometimes I see that and the stocks pull back a little bit, but they had a bunch of upgrades, price increases to 1,300. You know, I look at Google, and again, I look at the fundamentals, and I look at the earnings, and I wonder how much can this support. But you know, if it's going to have $61 in 2015 and maintains a multiple of 20, I mean, that is only $1,200. So I wonder if this stock is going to slow down. But you know what? I don't have a crystal ball. Everything here looks bullish, and it's a leader. Twitter, you know, I don't know how they're going to make money to maintain this. Facebook's great number, I think, drove a lot of the social media stocks. And Twitter gapped up on Thursday, had a bullish. I can't call it. It wasn't down. That wasn't down, so I can't call it bullish engulfing perhaps. But had a nice day on Friday. Everything is green, so we'll see what goes there. One of the best stocks here, and one that I've traded poorly, is VIPS. I traded poorly because I thought VIPS was here. I thought VIPS was in this group. I traded it poorly because I just got out way too early. You know, VIPS shook me out. I mean, this is the kind of stock that I wish I could have left myself in for a long run, but it's had some pretty profound shakeouts, and I think this is the one that shook me out here. And it's a pretty big pullback, but all in all, it's a pretty nice LUR above $100. Still got great revenue growth and earnings per share growth. It might be one to watch. Next one in the top 10 is application software. I don't understand most of these companies. Doesn't mean I don't buy them. You can see the forces were predominantly green on the group, 2-day and 13-day, so a lot of strength in this group despite a tough market. Acceleris, that looks like a buyout or something big happened, so I'm going to skip that one. ServiceNow, pulling back, so I'd like to see where it goes before I jump into it, so I'm not interested. Concur, sort of a bearish Harami day. Everything is green after a big gap up day on Thursday. I don't like these patterns. Here's an interesting one. Proof point, not much with earnings per share growth, but a Bible gap up and a MOBO breakout from the squeeze on Friday with a kahuna and huge volume. Something happened in this stock. I might want to take a look at it. Aspen, Salesforce, they all look alike. So here's a pullback to the 50. I looked at this last week. I should have made a call on it. You had a Bible gap up, MOBO breakout from the squeeze, DI crossover. Momentum looks good. A couple of kahunas. In fact, you got 3 kahunas the last 5 days, big volume. Aspen Technology looks interesting here as well. So there are a lot of nice stocks in this group, so this is why it made it to the list. What do we have next? I'm not going to look at utilities, but utilities made it up to 8 and 11. Cheaper for them to borrow money. I know they have a big debt area. Gas and storage companies, the MLPs, several of them looked interesting. Nice move up off the 50 here. Based, looks like it wants to run again. I think what depends upon these guys are their yields and whether or not they have enough cash flow to pay their dividends. Enterprise Products Partners, EPD, pullback, broke out on Friday with a MOBO breakout from the squeeze. Everything was green. Kahunas the last 2 days in a pocket pivot. They trade at a 4.2. I'm not going to look at all these charts, but I think the story there is pretty clear. As interest rates drop, the REITs become more attractive. To the downside, biotech has been rough. Now, I'm not against looking to pick something off on a discount. And but Celgene didn't make it here. Had to. And one of the, some of my favorite stocks, let's look at what bad looks like. And then we'll look at some of the ones that I do like. So this is bad. Run up, top, pull back, and then just got hammered on Friday with turning red on my momentum indicators, opening at the 50 and trading down to the 200, huge volume and red kahuna. This means they have bad news from something. I mean, that's worse than, I think, missing earnings. It looks like they had an FDA denial or a problem with the trial. Ariad, this is an interesting story. It doesn't look like much here, but this is a $10 pullback down to less than 8 that occurred when there's some rumors about potential acquisition at $20. Now, as somebody who's in this field but has no inside knowledge, I think this is an acquisition candidate. And I think that if somebody came in and bought this at the $16 range, you'd make most of the shareholders very happy. The big gap down was when the drug was taken off the market by the FDA, and it's been rising ever since the government put it back on. Talked about enough in the past. Concern about competition from Novartis and other drugs also hit it this week. Gilead, still my favorite biotech for the year, and I think it's at that 8-day exponential. I want to buy this on pullbacks. I keep an eye on that. So every time it hits the 50 has been a great buying opportunity. Now let's just take a look at Celgene. Good company, broken stock. I mean, if the market opens up tomorrow, you may have yourself an island reversal opportunity here. I'm going to start nibbling. I sold out when it got ugly up in here. And I still think this is a great stock for the future, and I might want to buy back some. But I have to see a reason, and that reason is going to require some momentum coming in to the upside. All right, so that looks at the upside, a little bit at the downside. What else would I like to do? Go into my warehouse view. Let's go into all securities. And, I like to look at sprinters. All right, I got to clean this out. I'm sorry, I shouldn't laugh. I think Ron made a comment about some people that have not cleaned out their filters and other files, I'm definitely the poster child on that one. Let's go down miscellaneous. Let's find Sprinter One Step with Bongo. So these are some of the stocks, and it's got one of my favorite patterns on it I see already. So this Sprinter's One Step with Bongo. These require them to have a green Bongo daily. Sprinters are technically strong stocks. And I look at this view every week. I look at it every night. It's a quick way of looking through some leaders. We'll look at the top 10 or so. It's an idea of seeing where the strength is in the market. Lots of healthcare stocks, information technology are the leading groups. The leading industries, biotech is strong. Application software, internet software, some pharmaceuticals. Okay. And then I like to look at, say, the top 10 very quickly. This is more of a bottoms-up approach. So here's Illumina. I don't get this company. They make some great life sciences technology products, but it trades at just a gigantic multiple of its earnings. And at an 85 multiple, and it has a growth rate that's not close. The stock's been pumped up several times on potential acquisition news from Roche, and perhaps that might be why that happens. But it's a stock that's extended at its high jump bar. Everything is green, however, and it's a leader. Alexion, I don't think Gil Morales likes the stock. I have my issues with it. Their product is $380,000 a year per patient for life. With a limited number of patients, they keep expanding the pool, though, with additional clinical trials, which is the right thing to do. Great earnings on Thursday with the Bible gap up, a DI crossover from the squeeze. Gave up a little bit on Friday, but you have the chance of getting in. You know, with the Bible gap up rules, you're out if it drops below the low of the gap. And so you could actually get in relatively close to where it gapped up. Everything is green. There were some upgrades to over $200 on that stock. Cavco, don't know this from Adam, but I like this pattern, sort of a base here. Doesn't look like there's a lot of volume in this stock. Let's skip this one, 22,000 shares. Not exactly anything I would look at. Questco we already looked at. Beware, buyer beware. Harmony International, I've talked about this guy several times. Missed a great opportunity to buy here. They make automobile, well, they make stereo systems, and they still own Harman Kardon, JBL, and a number of great brands from when I used to sell stereo equipment in the 80s and 90s. Actually, the 80s when I put myself through college, through med school, and the 70s when I put myself through college. You know, they had some great earnings come out. They got great earnings per share growth, moving to all-time highs. If the auto industry does well, this stock does well. It trades at a multiple of only 27 with great earnings per share, at least in the near term. Wesco, I'm going to point, this is an interesting chart. It went up on Friday because of an acquisition, and they also announced, pre-announced some of their earnings. So why did I like this chart? I hope I didn't speak too soon. So is it in an uptrend? Well, here's a weekly. Clearly it's in an uptrend, meaning it's sort of a cup and a handle coming in here on the weekly chart. But I guess I'm probably seeing things. So it's in an uptrend. On the daily, sort of had a cup, the handle failed, has based for about a month and a half, down to the 200-day moving average, which is rising. And then off of that 200 on Friday, what do we see? Everything's green on momentum. DI crossover. By a green candle low, a DI crossover, a MOBO breakup from a squeeze, a pocket pivot, huge volume, and a kahuna. So here's a stock that's clearly basing, that had good news and a lot of momentum come in. I like that one. That's on my watch list. Here's Qihu. We saw that before. And then Dexcom, clearly lower left, upper right. Doesn't make money. Don't know much about it. And let's see about the healthcare equipment, 600,000 shares. So that's one thing I might do. Now, what's really neat is imagine if you could do this and then go in your filters, and I'll work with George to make sure we get these for everybody. and I go into my little thing here, and I want to know which ones of these are having a MOBO breakout and a squeeze. Okay, let me redo this. So here's printer one step with Bongo. Now I have a couple of different things I can do. One thing I could do is I could go into Edit Current View. Go into my filter. Actually, let me do it backwards here. I'm going to duplicate my view here. I'll hit duplicate. Now I'm going to edit that one. I'm going to go into my filter. And I'm going to duplicate that. And then I'm going to edit that filter. I'm going to take that filter and I'm going to call it with Bongo and squeeze MOBO breakout. I'm going to come down here, I'm going to add, go down here and find my MOBO. You don't have this yet, I'm showing you how you do it. You'll have it, I guess, probably soon. We're almost at an hour. MOBO breakout equals yes, and on the squeeze, I'm going to put two functions in. I'm going to put Keltner squeeze today equals yes, or, so I'm going to let it be whether it was squeezing today or yesterday. Equals yes. Hit that as yes. Hit that OK. So it's in there. I'm going to change this to MOBO breakout squeeze. I'm going to hit OK. And then I'm going to grab this. I'm going to throw it down into my user view. All right. And I'm going to hit OK. And I'm now going to go do so there are 27.10. I'm going to have to play with this, but what I basically, let me go out of this for a second. So here's all securities, 2.5 and 150,000, squeezing with MOBO breakouts. And I was able to take my 8,000 stocks down to 81. So I might want to look at these. Again, another approach for top-down. The last thing I did something wrong. I'll have to go back and look at what I must have turned something off on the filter. But basically, I'm trying to find a tool that's going to allow me to find these. So I just scanned for them. Toll Brothers, going sideways. You can see the Bollinger Bands came together. You see the squeeze. MOBO breakout, Kahuna, pocket pivot, everything green, great earnings per share growth comes to the top of the list. Glatfelter is a lightly traded paper company, so it's probably too light for most of you. Great earnings per share growth. Gapped up, Bible gap up on Friday with a MOBO breakout from a squeeze. Everything is green, volume, and a Kahuna. That looks good. Aspen Technology, we already looked at it. Standard Pacific is a smaller home builder, pulled back to the 50. MOBO breakout from a squeeze. So the beauty is, here's that West Air. These will allow you, if you believe in MOBO breakouts from squeeze, to actually start to scan your stocks very quickly. MOBO breakout from a squeeze with a green candle low and a Kahuna. So that's the other thing that I like that was new. Rather than do the group inclusion filter for you, I already did one, so let's take a look at the one that I did. Let me run through the stocks very quickly, and then I want to say goodnight. Now, of the ones I saw, 4 of them had MOBO breakouts in a squeeze. None of them had MOBO breakdowns from a squeeze. 12 of them were squeezing. Let's just take a look at, I think I had 29 that came out of my scan. Let's just quickly look at what was in the GIF And I will remind you that in the week that was last week, the GIF All-Stars 16 to 11 were up 2.58%. And typically this is a good way to find. So Ryland, we've already looked at houses above the moving average, broke out here, pulled back towards the confluence of moving averages, and then had a kahuna, pocket pivot, out of a squeeze. Everything is green on Friday. I told you I like the home builders already. Questcorp, Quihu, Illumina. All right, so far every one of the stocks we've seen are stocks that came up on our top-down review. Here's Jazz. Pulled back a little bit on Friday, but this is a stock that's at its all-time high range. It's just become very loose here and no longer as attractive with this looseness. If it tightens up, I'll be interested again. This is tight. This is not bad. It's sort of intermediate. This is ugly, and it's had some big swings, so I lost interest. Lanet had a nice run up, giving us a base here. Had a MOBO breakout from a squeeze on Thursday and failed on Friday. It could run again. I've got that one I'm watching closely. Valiant, like Jazz, this one's problem was it really went parabolic, and it can't last, and it's pulled back, and we'll see if it bases again before it runs. Nice base, and it ran. We'll see if we get a base out of it. Activist, we already talked about it, the old Watson, nice lower left, upper right. This is a stock I think I talked about a week ago. Great earnings on Friday. Everything is green. Bible gap up. MOBO breakout. Big gap up here. Kahuna, tons of volume on earnings. I looked at this one, and what I liked about it was also its earnings. So now there are other stocks that are like Manitowoc. 20 times 180 is 336, and it's trading at about 28. So I think the stock has some run in it. And you might want to look at other things in the construction. United Rentals is one that comes to my mind as one that might run similarly. Aspen Technology, we've already looked at. Web Group, this is one that, I don't know, every time I bought it, it's just gone sideways. Had a nice little move from about 27 up to 34. Everything is green. Makes money. Ultimate Software, don't know much about this. Everything is green. Had a MOBO breakup from a squeeze on Thursday with a couple of pocket pivots, big volume of kahuna. Gotta love the long base. This may be something that's ready to run again. I think it probably makes that new book I'm reading, I think it probably meets its criteria as well. Ultimate Software looks pretty good. Dexcom, this showed up already on our review. Don't know much about this company. Lower left, upper right with the MOBO breakout from a squeeze and a kahuna on Thursday. SoFund Holdings, another one of these Chinese stocks that's been volatile. Ignore these. It does make good earnings. It's a real estate internet company. Good place to buy it on the 50 because you can set your stop maybe down closer here on the 65 exponential, maybe right below the 50, and limit your downside. Gas Log sold off hard, so there's kind of an evening star, so I'm not much interested in this one. Wynn Resorts, we already talked about it. Baby or Natus Medical, starting to get a little loose up here. It's had a nice run. Here's that VIPS that I looked at before, I was looking at before. Great run. Alexion we looked at before. Auxilium we looked at before. Capstone is another paper company with great earnings, giving a nice base, and in that base it's squeezing now. I had kahunas on Thursday and Friday, and I think Ian taught me a long time ago that when I see multiple kahunas, I get excited. Green Mountain Coffee Roasters, bunch of kahunas, a pocket pivot, MOBO breakout from the squeeze on Friday. Everything is green. Looks to me like it wants to wake up and move. Something you might want to look at as well. The point here is that West Air is the group inclusion filter is finding the same stocks that I found on my top down and my bottoms up, and it's a one-step thing which I demo every week. Under Armour, great breakout on earnings. Kahuna's already too expensive for my taste. Facebook we looked at. And then lastly, some of the defense stocks were moving. Here's one that's pulled back to the base. 50 has been a good time to buy it over the last 6 months, and it's at the 50 again, and that's Spirit Airlines. Actually, there's also Spirit, which is a defense stock. That's SPR. That looked good. Tyson Foods is a time to buy chicken. Great earnings per share growth in the near term. Had a viable gap up, a MOBO breakout into a squeeze. Everything is green. A pocket pivot, including huge volume. Great earnings per share growth and a multiple of 15. Small dividend. Maybe it's time to jump in there. Biogen IDEC, great biotech. And then Harman International. So on that note, I'm going to say goodbye. Let's take a quick look and see if the futures are doing anything. Give me some feedback about this resolution, because all I did was dial it down on my computer. And if that works, then I'm going to use that resolution. Futures maintaining about 3.5 points up. Asia Pacific looks like they've opened up down hard. Not a big surprise because they're reacting to the market that we had at the end of the week. That note, I'm going to say goodnight. And hopefully this worked out. We'll see you all next week, and look forward to seeing everybody in February and in March. Good night, everybody.